Okay, guys. We did give everybody 5 minute grace period, so whoever's not here can watch this on the playback. We will get started. I am Omar from VM Trading Club. Today we're going to be going over price charts, the most basic and simple things that any person who wants to participate in financial markets need to know. And the kind of price charts that we will be looking at are candlestick price charts. So let's get a little bit familiar with what are candlestick and candlestick price charts. So we can just jump into the charts and understand how to establish trends, ranges, and how to identify entry and exit points in a price chart. So, a candlestick is a way of displaying information about an asset's price movement, enabling traders to interpret price information quickly. And from just a few price bars, we can tell where price is going, and understanding these candles and what they say can actually give you a little bit of a heads up before a market move. Now, candles have an anatomy, they have a body and a wick. The body represents the open to close range, while the wick indicates the highest and lowest part of that candle. The candles are also color coordinated, which reveal the direction of the market or equity movement. So if we had a green candle, that indicates price is increasing, while a red candle indicates that price is decreasing. So the anatomy of a candle, as we said earlier, we have a wick, which is the shadow or the extension above the body of the candle. Then we have a solid body, which is known as the body of the candle, and we have a wick to the downside. Now we have what's known as bullish and bearish, or uh, positive and negative, or green or red candles. One indicates uh, price increasing, and the second one indicates price decreasing. So let's get familiar with a bullish candle and what it represents. So the open price typically is at the bottom of the candle, while the closing price is at the top of the candle. So opening price is usually higher than uh, the closing price is higher than the opening price on a bullish candle, while on a bearish candle, the opening price is higher than the closing price because price will open at the top of the candle and close at the bottom of the candle. It's the inverse of a bullish candle is the bearish candle, basically. That's what we need to know about the candlesticks. These are most basics. And then we have different kinds of candles that form on charts. And these candles can actually give us an indication as to what may or may not occur in price. So as we see, the top candles are bullish candles, which is buying pressure increasing. We can see candles form this way where we see some selling pressure. Then we can see candles like this where you have buyers and sellers fighting with the price, and where the price action will typically close at the midpoint of these candles. And then where we see solid candles, then we know that there was just solid buying activity that was continuing. It's also the same on the sell side, or the negative candles, where you can see selling pressure increasing, and these candles would look something like this. Now, with that being said, let's jump into a price chart and get familiar. So for today's example, we decided to settle with Walmart. We haven't looked at Walmart in a while. And if you have any questions, write them down and ask at the end. We will give people the time to ask questions. So let's get started with the chart. Typically, when we're looking at a price chart, we see, we want to identify long-term trend. Okay, let me make sure that I share this screen with you guys. 1 second. Okay, new share. Okay, so this is the Walmart chart that we are going to be looking at. Depending on the platform that you're using, your charts may look differently, but all we have here is a candlestick chart and some candle volume bars at the bottom. Typically, when looking at a chart, what we want to see is we want to see trend, whether it's moving to the upside or to the downside. And identifying trend just requires you to just look at a chart, zoom out and look at a chart and see what it has been doing for a year, 2 years, or 3 years. Now, even looking at this chart, we are looking at a 6-year chart, and you can see Walmart has been on an uptrend. Now, having said that Walmart has been on an uptrend doesn't mean that we could buy it at any point and expect price to continue to move up. The markets were designed so they can continuously move higher, but they don't move straight up or straight down. They move in series of waves, impulsive and corrective waves. Those are known as. But what we would want to do is identify the highest point, and we would put a resistance level over here. A resistance level basically tells us where price has topped out and there was more supply than demand. So remember, that's what moves price is supply and demand. If there's more buyers than sellers, price will go higher. And if there's more sellers than buyers, then price will go lower. So at this point, at this price point, $153.63, which seems to be the all-time high for Walmart. We can see that it was faced with some sort of resistance where we had a surplus in supply, followed by its earnings call. This thing just gave back some of its gains and retracted. Now, when this retraced, and if we were watching this as it was retracing, we would want to identify levels where we can potentially find an entry or identify an exit point for Walmart. So the theory behind support and resistance or supply and demand zones is that once a level of support is breached, that level should act as resistance. And once a level of resistance is breached, that level should act as support. Now, going with that theory, we will start by placing or identifying support levels. And our support levels are typically going to come from previous resistance levels. And that's the easiest way to start this. If you're confused as to where do you set a support level or where do you set a resistance level, find price points. This was the previous highs. And we can see that at this price point, it failed to go higher before retracting, pulling back, then going higher again and coming back to the same areas where now it consolidates and breaks out to the upside. Now, we can say a support level can be established within this trading range because we can see price stayed at these levels for a while, confirm this area as solid support, a decent support area at 117, a trading range of 121, where it held and moved higher from there. And this is where we have a trending market. So we can absolutely grab a trend line and pick a bottom at the chart and try to see what has price done in the last 5, 6 months, or even up to 1 year. So if we look at the price action and where it's trending, we see our trend was pierced and breached over here to the downside. We can also actually increase or up this trend line, bring it up a little bit to get a closer look, because this is where the trend started. This is where it confirmed that trend line support. And this is where we get a consolidation right by trend before that trend is breached. As we see, this trend line did not hold solidly because we have multiple areas where price broke to the downside. So it's important to identify these, because if you're looking to trade around any stock and you understand that, okay, this sometimes breaks below its trend line, this sometimes behaves in a different manner. And that's all we're doing here is just identifying what is going on with price action and where can we establish these trend lines and entry and exit points. So as we can see, none of the previous levels actually could have given us a clear indication as to where price may or may not stop, except these levels right here. Now I'm going to pull out a rectangle so I could identify the levels to you. So do remember that there is no such thing as a perfect support or resistance level, or there's no way of charting. There's no one perfect way of looking at a chart, because this is an art and not a science. So if we look at this trading range between the 128 and 132, we see that we had a period of consolidation here right but after it popped. It gave it back, price failed again on its earnings, and then we come right back into our old range. So as price moves to the upside and comes back, our next price point to be watching would be this area of consolidation. This area of consolidation is a price point to watch because any place where you get accumulation or distribution, you just want to keep an eye on. So remember, as prices going up, it's trending markets. But as prices going down, that is known as distribution. So people are selling, they're realizing profits. And when prices consolidating in a set area, that is known as accumulation. So after a period of accumulation, there are two things that happen. Price either moves to the upside or moves back to the downside and goes right back into that distribution phase. It's important to know this because every point where price consolidates or accumulates, then we can expect the same demand. Remember, it's a supply and demand that move markets. We can expect the same demand to come back in and start buying up again at these levels. Now, if you missed these areas for a trade and you are looking to trade Walmart in the future, what you remember, we are looking at a daily time frame and we will work our time uh, lower. We're going to go lower time frames as we look at this chart because if we're looking to trade, we want to trade a smaller time frame if we're not investing. So if it's an investment, then we look to buy at reasonable prices or a discounted price from where the stock usually trades. And if we are looking to trade this to make to make a quick buck, then what we would want to do is identify levels where we can potentially trade in and out without taking on much risk and having to hold on to our position. So this area that we just shaded right now, let me just remove this old stuff here from the chart. If we just paid attention over here, we can see that price gap to the downside. Now, price gaps tend to fill most of the time. Sometimes they take longer than people would expect it to, but price gaps do fill most of the times. So we have a price gap here on earnings where price failed from 144 straight down to 138, then continued to go down to 126, our previous consolidation area. As we can see, we get a nice bounce back and then a period of consolidation right by the previous levels of trading activity. This is where it popped up from and had that move to the 150s and it fails again to the downside, but this time around it starts to form a new pattern. It's important to identify patterns. We see a low point right here. This is a low point, and then we can identify a second low point where we can see price go a little bit higher. And then when it comes back down, it does not come back down to those same levels. Now, these are known as series of highs. Series of highs tell us that, okay, the market is, it tagged the low and it keeps making higher highs. So we can expect it to continue. So if this is the next point where we go higher, actually, let's add extra periods so we can see what may or may not take place. We're going to add an extra 10 periods. So if we added a few more periods to see that, okay, will this 134 hold as support? If the markets were to pull back, which some people are expecting the markets to pull back, it could have a large pullback or a minor pullback, then we would want to see these levels of 133, 134, and 130 hold as support in order for us to comfortably enter this trade and say, okay, that 126 print by the areas of consolidation will hold as a decent level of support, and we could expect price to grind back higher. For a safe entry into Walmart, if we want to know if it's going to continue to trend higher, we would want to see if it's going to fill this price gap. But at that point, price would be up at 144 or 145, and we can absolutely trade this up to those levels and make a few bucks while we at it. So what do we want to look for when we are looking at that? We want to look at our volume. This is where we will introduce ourselves to how many shares were printed and get familiar with understanding how the change in the volume print can absolutely give you a guidance as to where the stock is going to go. We can see this was the high, and some selling pressure starts to come in. Selling, there's more selling than buying. And then we see a big spike in selling on this move lower on its earnings, followed by more selling until this point here, which was on March 5th, 2021. There was consistency in selling, and now we start to see buying activity taking place, right? We do see some selling, but there's more buying coming in than we saw in the last 3 months before that. This will make us keep watching this. Now, the only problem is that on the sell side, it sells on above average volume, while on the buy side, it's average volume. So we do need above average volume in order for us to see this thing move to the upside. What is an above average volume count for Walmart? 20 million shares traded a day. So it sells off on 18 million shares. It had this nice bounce after its dividend distribution on 20 million shares, but the average share count is about 10 million shares traded. So we now know, looking at a daily chart, if we don't have the time to sit in front of our charts all day long to watch price action, we can just simply watch price and volume and to see if we have spike in buying interest where the demand is coming right back in. Now we started with a daily chart. It's best to work your way down to a 60-minute chart, then down to a 5-minute chart, depending on how long of a time frame you're looking to trade, because you cannot have accurate entry and exit points if you wait for daily price targets to reach. You can wait a while before that takes place. So if we just zoom out and we look at a 60-minute chart, we can see a market that hit a high, started trending lower, and after it trended lower, we see a bounce. So nothing goes straight down, nothing goes straight up. But how can we tell if this bounce is actually going to last or if this is just an impulse bounce? Because that's what it's known as. We would simply find a trend line and slap it above, just as we did a trend line from below on the longer time frames. Now we can see we have a market that is trending lower on a short time frame, but we see a bounce at 134. Let's see how many times have we been able to hold that 134 as support or resistance levels. And if we go back to this point, this 134 mark was resistance here before price failed and then continued to go higher on a nice bounce after that earnings drop. So we have the earnings drop, and then we have 134 acting as a junction of resistance or selling activity, and we do need some spike in buying activity to see price move off of that level, where we can see that happened on April 5th. And if we come back to the day it failed on March 15th, we see that we did have a sort of a spike up in selling activity. So it's important to make correlation between what took place in volume print and what took place in price action. But looking at this chart doesn't necessarily tell us that this is a negative trend. Do remember, we are looking at a shorter time frame. This has trended lower since earnings and found a level of support at a previous level of resistance, which is a good thing. And the second thing that we want to look for is we want to see how many times have price held this point as support. So that's the only way we know if this is a solid area of support or if it's a weak area of support. And if we just take out our arrows and just point out the price points where we consolidated, we came near it to test it for support levels, and then it came actually to that same price point and pivoted, turned right back around. Now, if price snaps above this trend line, this negative trend line right here, then we could expect price to continue higher, at least to these points of resistance of 144. So if you guys recall a few minutes ago when we were looking at the daily time frame, we had a wider range to trade, as right now we have a tighter range to trade. So our level of resistance which is now support. We will change the color so we understand. Green is our level of support. Red is our level of resistance. And the trend on a short term basis was negative and may have just turned around and started a positive trend. Only way to tell is time and to wait and see if what we are charting is accurate. And like I said earlier when we started, we chose to chart Walmart because we haven't looked at it in a while. And I guess I will be watching it next week to see what takes place. So let's look at what happened here at the bottom. As the stock was coming down to these 134s, we see a spike in buying volume. So the whole day we have flat volume for days. This is April 16th is flat volume. The thing is at the highs. Now, again, we have flat volume on the 15th where it's trading on 67,000 shares for every hour. And you can see that price just sat there, could not make a decision as to where it's going to go. And as price, as price tried to make that decision, we could see the next day the sellers come in and say, "Hey, we make the decision for you," and now price goes to the downside. But it is followed by a spike in buying activity. So we see another day of average volume, and then we see a regular day where price drops, but it prints a low at the same levels in the past, and then we see a spike in buying activity into the close. So if we look, this is the closing candle, last hour of the day, power hour on June 18th, and there was a spike in buying activity. And from that point on, Walmart began a new positive trend. And what is happening here? We see we have a trend line from the bottom and a trend line from the top. Price eventually squeezes into a point where it needs to break to the upside or to the downside. Typically, we would watch volume again to see if the move is going to happen to the upside or not. And if we see another volume print of 5 million shares, then it would be safe to assume that Walmart would make a move to the upside. Now we're going to go to a 30-minute time frame. A 30-minute time frame is going to give us a clearer analysis as to, okay, we now established a wider range. How can we trade a tighter range? And this is for those who want to day trade and scalp markets, which is what I do. I day trade, basically buy and sell throughout the day. And if you want to buy and sell throughout the day, then you need to establish tighter trading ranges. And by establishing these trading ranges, you allow yourself to enter and exit, even if the market is choppy and it's just sitting idle in one place, because markets just don't sit flat at the same price. Price moves up and down, even a few cents. So if we establish trading ranges, we establish a support level and then multiple resistance level because price was coming down and we are looking to trade this up. As price gets above 138, we can expect it to go to 140.89 because it is out of that price range where it failed right here. This is where it broke to the downside. Price confirmed to us right here. Let me start drawing arrows so people can see what I'm talking about. So price confirmed over here that it was going to stay below that point. And this is where the breakdown occurred right here at this point. We can see this big spike in selling activity and price stayed down there for a week. And we can see that the same levels that price broke below, um, where we have on Friday, finally a positive price action and price got above. So if we're looking to trade this range, we would look for a trade. Let's just add some periods. Okay. If we were looking to trade this into the next trading session, what we would want to do is we would want to see the 138 hold as a level of support or price stay above 138, and we would look for a trade above 139 to 140.80. That would give us a $1.89 potential move of upside and $8 move downside to our previous resistance level. So If you wanted to trade this, these are the things that you would need to be watching. You would need to be watching these levels for price to get above. And if price manages to get above these short-term targets, then we could expect to see price continuously grind to the upside to its previous highs. So this is where we had that decision and extra supply come into the market. Let's put an arrow here so we understand what we are talking about. We're talking about the extra selling activity that drove price down off of this high point. This was that break that took place. And now, once price gets above 139, we could expect it to face some challenges at these levels, at the 140.17, which is where it broke down. And if it manages to get above there, then we have a trade up to 148. Now, we're looking at this on a 30-minute time frame. But if we want to prepare before the market opens, and we want to make sure that, okay, can we catch some of this trading activity? How do we know we will get this move or not? Well, only thing you can do to find that out is to go out, do the same thing, identifying levels where you are comfortable getting in. So we see that this is the level that was lower, and then we see that this was the resistance for the previous session. So the idea is once price breaks above resistance, it should confirm that as a support level and then continue to go higher. How do we know that's going to happen? Um, Volume right here. This is your best friend. So when you look at volume, we understand that from the day before it had a low of 135.78 and it had a high of 137.18. And now we know that if it breaks this 137.18, price is going to go back to the upside because it's recovering from a downside move. Now, the only way to trade this comfortably is to understand the volume that is coming in. Is it positive volume? Is it consistent flow? And then the shapes and the candles. So we can see that we have a bullish candle followed by a smaller bullish candle, followed by a smaller bullish candle, another bullish candle. We don't see a bearish candle until price reaches 138.36. So at 138.36 is where you see some selling activity. Although price did continue to the upside, it did not go much higher. And what happened towards the close? We saw some selling activity. So this automatically would leave us now to watch for a 137.18 entry, or not a 138 entry. The reason that is because we see a spike in selling activity towards the close. So remember when we were looking at a 30-minute time frame, let's go back to that chart really quickly. When we were looking at this chart, we were looking for a trade above 139 all the way to 140.89. So it was about a $1.89 move. But now as we went into a shorter time frame, into a 15-minute period, we can see that, okay, the volume print was quite different on a 15-minute period towards the close. There was some spike in selling activity. This could have been dark pool orders that executed and came in at the close of the market, or the print actually came in at the close of the market, or could have been some option contracts that were exercised and converted into shares. And the thing that makes this data here that we are looking at quite confusing is that we have buying activity in the morning, which is clear and simple. Price actually follows exactly what we see over here. Then we see a mix of activity followed by some selling, slight spike in buying, followed by a large sell order into the close. So this would make us watch these areas to see if price manage to get above here? And if price doesn't manage to get above here, and we would look for an increase in selling activity. If we see an increase in selling activity, we have a trade to the downside, because you can trade markets whether they're going up or down. It does not matter where the market is going. There's always room to make money. If it's going up, you can make money. If it's going down, you make money. You have to just identify what kind of a trader you are. And do you want to trade long or do you want to trade short? Maybe you want to be on both sides. But now, this is where it's important to get a little familiar with patterns, which we will try to get over on our next webinar also. Uh, so let's go now to a 5-minute time frame to actually see what we can or cannot do to determine if we have a trade entry, previous levels of resistance, and this is a 5 minute period. Now, all we are watching is the activity for Friday. As price moved off of this level of resistance from the previous day, now we would be looking at this as a level of support. It's no longer resistance. And where have we established our levels of resistance from? We have now established our levels of resistance from our longer time frames. From looking at a 60-minute, 30-minute, 15-minute, we understand that price was at 154, came all the way down to 134, found a level of support over there, and now it started moving back up. So our expectations is that we may see price grind all the way back up to the $154 range, but we don't want to buy and wait and hold for the next 3 weeks or maybe a month or until the next earnings call where Walmart comes out and says they did better than expected and price starts to move higher. We just want to trade this for the day. Of course, we don't know how much of a move a stock can move. We have expectations, but what we can do is trade levels. And how can we identify what are the levels to trade? So we're going to go back and look at Thursday's price action, and then we are going to come back and look at Friday's price action to try to make an analysis or determination as to what may take place come this Monday, right? So if we analyze this data here that took place on Thursday, Friday, can we determine what will take place on on Monday, based on these prints that we look at? So off of the open, we have 40,000 shares traded on every 5 minute period. And we see that the stock moves from 135.77. It had to move all the way up to 137.10. So that's about a $1.20 move that we see to the upside. And it had this move, almost a straight move to the upside. And after it had that move, it retracted. How much of a pullback did it have? About a 40 cents move. So we now know that off of the first spike of the day, we can expect about a $1.20 move followed by a 40 cents pullback, which gives you a net profit of about 80 cents in that trade. And that's assuming that you would set a stop loss down at 136.70, or you would watch this to see if it breaks this new range that it forms, which is known as the intraday range. So remember, we have longer time frame range, and then we have intraday, basically means within the day. So as the markets are opening, now this becomes our trading range. And we can see that, price comes up to the same range, comes right back down, and it tries multiple times. But what here can tell us that, all right, maybe we ought to expect the next day to be a higher day. Let me point this out for you guys right here. And hopefully this will give you an idea of what you want to be looking at when you are looking at a chart. It don't matter what chart it is. So we can see that this is the higher point, and this is the same point where price comes back to. So we see price tag the low of that range, and then it held that range on a trending market. And then although it failed to break higher than the resistance levels, right? Let's see what it actually did. It came right back to the same price point. Same price point. So we now know that, price is comfortable staying higher than what it did after it set up that trading range. And if this pattern repeats on Friday, and the pattern, then we can expect the pattern to actually repeat on Monday, unless we had 3 days of up moves, which we did not. So typically markets trade up. It takes 3 days to make a trend, and the trend is your friend. So we had a negative trend. This was day one on Thursday to move to the upside. Coincidentally, we picked the stock. And then Friday was day two. So we can probably expect Monday to be the same thing. But now let's actually verify the data that we looked at on Thursday to see if it did the same thing on Friday. And could we have made an analysis on Thursday to trade this on Friday? We see price open up at 137.09, and price moves all the way up to 138.85. This is about $1.85 or $8.75 move. So the previous move was of about $1.40. Now this move got slightly bigger, but we can see we had a drawback, a pullback in between that, where our first move was about $1.40. Then we get a pullback of what, 20 cents or 22 cents from a dollar. Let's see, from $1.48 to $1.22 to 38.22. Yeah, about a 30 cents move or a 28 cents move to the downside before continuing up. So we see that Walmart is repeating the same pattern for now the second day in a row, where it just pops a dollar off of the open, even though on Thursday it had a dip before it moved to the upside, but it popped off of that dip $1.40, and we could see that it did the same thing again on Friday and then pulled back another 20 cents before continuing for another 80 cents move and then giving back 30 cents out of that. So we have now established what is a trading range for Walmart. So if Walmart moves up $1.40, we can expect it to give back anywhere from 40 to 60 cents of that move. And if it forms a higher leg, just like what it did over here, then we could expect this price action to repeat on Monday, right? And if this price action repeats on Monday, then we can expect to see a higher price range, and 3 days forms a trend. So we may actually see Walmart grind up to 154. The only problem with that theory is that the markets are at all-time highs. And if the markets decide to take a dip, then it will push everything down with it. So let's see what happened here. We can see we have a low, a higher low, and then, a higher high, and then a higher high. It just keeps going higher at this point before forming a range. And then after it established that resistance area, it came back down. But where did it come down to? It came down to the first area that it held off of that first move up during the day. So we can see that this area is going to act as support. And this is what we want to see hold for a support level come Monday morning. And if prices anywhere below here, then we could expect these prices to come back to 137.64, 137.16. And if these levels hold and we see buying activity, although on Friday we didn't have clear buying activity to give us direction, then we can now see that you know we need to trade this off of price action and not off of volume. So sometimes volume is actually weak and light, and you get some crazy price action. And this is where you are trading with uncertainty, because you don't know if you are on the demand side or the supply side sometimes, because they just whack you right in the middle of that day. So if now we are going to look at the smallest time frame chart, where typically we can spot reversal candles. Reversal candles are candles like this. Let's just point them out. This is the only reason why I look at the 3 minute candles as I'm trading. I did have someone here yesterday where we spotted a rejection on a 3 minute candle, and that saved us some money. We just got out of a trade. There was some more money to make. But anytime you spot reversal candles, this is a reversal candle that tells you, okay, price hit this price point, started giving back, but automatically reverted to the upside. And then we can see it did that again over here. And then we have a period of consolidation where these candles are now holding. So, and these levels become a little bit more clearer as you're looking at a 3 minute chart. But when you are trading, you do just want to look at the 3 minute chart to give you a confirmation of continuation or short-term rejection of lower or higher price. And this allows you to lock in gains or to protect yourself from further downside. Now, with that being said, we have 15 minutes left on this call. We're going to start taking questions. So if you have any questions, feel free to ask in the next 15 minutes. Nobody has any questions? Everything was that clear? Did I lose everybody? Did anybody fall asleep while I was talking?
No, it was very clear.
Hey, oh, why don't you go through like a scalp on Tesla or something? Like that puts that I scalped the other day.
Options. Then we would confuse people by
No, no,
going
no, just
into
do it off
options.
the chart. Just do it off the price action on the chart.
So, I was trading Tesla yesterday as well at the same time. So, um, we, I think, where is it? Yeah, it was this candle right here. This was the candle that saved us from losing money yesterday. This little rejection right here. Was that the case? Yes, it was. So let's, was it, no, you were trading it on Thursday, oh, right? Yeah, you traded it on Thursday.
Yeah, I was on Thursday. I caught it at the top.
You traded it on Thursday, right here. So let's look at what happened on Thursday. If we come back and look at Thursday, so we get price. I mean, okay. So anyone who's not familiar with price patterns, do take the time to go out and look for price patterns. So we can see that Tesla did gap up off of the open. And if you guys recall, in the beginning of the call, we said that price gaps do tend to fill. Sometimes they take their sweet time to fill, and sometimes they fill right away. So let's look at this beautiful, clear example of what took place with Tesla. Tesla gaps up from $663. We were trading it all week, all the way up to 673, and then continues to move to the upside. Now, at the top of the day, this is what took place. I get a phone call from O, and he says, "Are you seeing that?" I'm like, "Am I seeing what?" He says, "Tesla." I said, "I know. Tesla went higher." He says, "No, it's about to reverse." I say, "Why?" This is what he points out to me: a head and shoulder pattern that takes place within the chart at the top of the day. Now, spotting a pattern like this can save you or make you a lot of money. If you are long, meaning you were in the trade for an upside move, you could have locked in profits at these levels. And if you were trading, if you were short trader that wants to make a quick buck and you know take a short position. We typically don't short stocks, but we do take on short positions in put options. And put options is another way to short the stock. So this was the pattern that he was talking about, the head and shoulder pattern. And as we waited for Tesla to break below these levels, is where O was looking for a trade. Now, the reason he was looking at these levels for a trade was because price consolidated here. It looked like it was going to fail, but continued higher. So this move had took place. There was a scalp over here for a few cup of coffees, and then after this scalp, this is where the real move took place. When price broke down below this level and bounced back up, this was a confirmation that price would continue to go lower because remember we said trend is your friend, right? So if you have just slapped a trend line to the downside, this is clear that we are going to get a move lower because we are trending lower and price keeps failing at lower price points. Just as we looked at a market that was trending higher and we saw levels going higher, we can see levels going down. This would be our first leg. This is the high of the day, and then we would have another leg here. So it's a clear staircase formation. Some people like to call it an escalator because it takes 3 days to move up and 1 day to move down. So depending on the terminology you like to use, but we can see that there's one thing that keeps happening. It's making staircase formations lower. So it'd be safe to assume that you'd catch a move lower. And this is where the arrow is, where Mr. Parasha took his short position and rode this down to the end of the day. Now, how far down do we know Tesla is going to go? At that point, when you're looking at the trade, this is all the data that you have. So this is all you know is that price bounced at 170, I mean 678. So if price bounce at 678 and you see price at 678 and you don't take profit, you give it back, which is exactly what Mr. Parasha did. He made sure that he took his profits at these levels right here. He didn't wait for this price point to go down another $2. He was happy to take his profits from the 180 one I mean 689 levels all the way down to the 678. And by taking that trade, what he did was literally capture some of the um, money that was lost in Tesla and put it in his pocket because net long, we riding these shares from down at 570, I think, or 580 or so, even below the 611 part. So this was the week where we saw Tesla move back to the upside. Now he did that on Thursday, but on Friday, we traded the bounces. So it's a matter of identifying what you want to do. We took a long position here and we got stopped out because we didn't take out of the trade. So that trade did not go as planned. Then we took another trade to try to make up for it on this move, which paid out. We took a third trade thinking that, okay, we may catch a bounce over here. And obviously, this trade got stopped out over here. And then as I'm sitting here explaining to someone I'm showing the markets to a rejection candle, I'm like, oh, that's a rejection candle. I'm out. This was where Tesla was trading. So being able to identify a rejection candle, I mean, I don't like trading shorts. I like going long, but identifying this rejection candle and understanding that the trend for the last 2 days have been to the downside. Do remember, there's money to be made on the upside and the downside. Even if the market is going down, I did make money while trading calls going upside and not betting to the downside. But spotting a candle like this can, tell you, all right, get out of the trade or maybe lock in profits or set a stop loss so you can protect whatever gains that you have already accumulated. But seeing that we have 2 days of trending markets and 3 days make a trend, we have one day down, the second day down, and we can see in the post market activity, Tesla also trended lower, and it's actually $2.80 lower. We can expect it to go down slight further. But now the only problem with that theory is this. Remember, we said every gap is typically filled most of the times. So we technically almost filling that gap. The bottom of that gap is at 663, and that price point can be hit. We can see that price point in the pre-market activities, and if we've seen that in the pre-market activity, um, we can expect price to bounce if the markets are positive. The reason why I say this is that we look at volume and try to make the correlation between price and volume. We did see a slight spike in buying activity. So for those who waited to see this gap, this price gap fill, they are now looking to enter Tesla at these levels if they see buying interest. Um, I think that's about it for the Tesla trade. We could sit here and go over 20,000 charts because we actively do this on a daily basis. I did not host this webinar so I could show you what I traded. I simply hosted this webinar so we can show you how to look at price action and how to interpret it, break down from a longer time frame to a shorter time frame to help you in your trading. So if you guys have any questions, we'll be taking them because at 2 p.m. we'll be looking to end this Zoom call. So I'm sure, okay, Stacy. Stacy had a question earlier today if we were hosting regular webinars, which we are. If you have any questions, Stacy, feel free to ask it.
The only question I have is, can you recommend any additional resources for charting?
Absolutely. I mean, we could, you'll find a lot of stuff on YouTube. We also do host, we do teach one-on-one classes, but only for students who are actually committed and looking to actually spend a lot of time doing this. But I'll send you an email with some resources that you can look at. They're absolutely free, and you just go through them. But the truth is, you have to sit in front of a chart and try to play around with it, charting it with the simplest strategies ever, just identifying resistance levels, areas where price fail, support levels, areas where price bounce, and trend, whether it's going up or down. If you start with those three basic things, that should give you um, a slight advantage when you start charting, because you would take most of that guesswork out and you have a place to start.
Okay, thank you so much.
You're welcome.
I have a question.
Sure.
Can you show me the correlation between the volume and the price action and how it would predict if the flow of the chart is going up or down again? One more time, if you can go over that.
Okay. So how can we tell if price is going to bounce based on volume? That's your question?
Yes.
Okay. So we're going to stay to the same chart. Prices down, 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 down. We see selling, selling, selling. We see some buying. This is where that spike happened. I believe you were here yesterday when we took this trade. And then we see a continuing in selling, 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 selling. But right into the close, I actually took this trade. Right into the close, we see buying coming in and then more buying coming in. Now we see some sell that happens, but the sell is after the spike, after that bounce took place. So this bounce was predictable because of one reason. It's not even because of the volume or actually the correlation. It's simple impulse bounces that happen in price action. If you remember when we looked at Walmart, we looked at it moving $1.40, $1.60, and then giving back 40 cents. So sometimes understanding how much price moves can tell us where that bounce may happen. And then we simply just sit there and watch the float, the actual buying and selling activity to make that prediction. But if we wanted to spot it, say, on a longer time frame, so let's look at this. How could we have predicted that price is going to continue to move higher and not go lower at this point? Is we see consistency in buying activities for 3 days. And that happened after we saw some consistency in selling activity and where price goes from 638 all the way down to 567. So this right here, just if we looked at these 3 days on, this was the 16th of June, the 17th of June, and the 18th of June. These 3 days could have given us a clear indication that, okay, we need to watch this now because there's not that many sellers as we saw from the week before, right? And this is why we were watching Tesla for the last week or so, because we just saw some consistency in buying activity. And if you follow a stock like Tesla, anytime you see consistency in buying activity, watch this, you always get a move in price. And it's just like free money. Somebody telling you, hey, just watch. Whenever you see consistency in buying, buy me. And we could see consistency in buying, but price really didn't move. Then price moved. Then we have a repeat of selling. It's a repeat and wash, same thing. We have more selling activity that comes back in. And then we see some buying activity that spiked over here, consistency in buying again. So what happened after that consistency in buying? 2 days later, Tesla spikes and moves up from $611 all the way up to $698, an $80 move on that stock. Did that answer your question?
Yes, it did. Awesome. Thank you.
You're welcome. Adnan, Ahmad, Hassan, anybody has any questions before we call this a day?
We're good at this point. Thank you very much.
You're welcome. Okay, so with that being said, we are going to wrap this up. We will be hosting webinars on a regular basis, so we can share some of this information with people who are interested in getting familiar with markets and how to trade. And if anybody has any questions, do not hesitate. Feel free to reach out. I hope everybody goes and has a wonderful weekend. Enjoy your weekend, and do keep an eye on Walmart for Monday. Try to play around with the chart and see if the levels that we went over will hold, and try to apply what you learned today on your own on any price chart. These strategies are simple and all we are looking for is to follow the money. Look at the buying and selling activity and do what the majority is doing. The trend is your friend, and everyone have a great weekend.
You as well. Thank you.
You're welcome.
You as well.